Hello. Good morning. Welcome to another ES Futures trading stream. Today is Thursday. It is May 15th. It is 8:56 Eastern Time in the US. I got this stream today because I think there may be some opportunities or clearer opportunities today. I am just trying to put things in context here. Right? Let's go. Let's go to check what's going on in the market. Huh? Something really quick here. Now we have this big retracement the market has. It pretty much retraced the whole year, right? 12 months of advance. The market retraced in like a couple months after making a range up here, right? This has removed all this inventory here, and there was something very special that I have noticed here is that this pullback here, I'm not pullback, the retracement that the market had. Now I hope you remember that when this was happening, okay, when this was happening, everybody was just talking that we are witnessing the end of the world here. And the particular thing is that this pullback, this movement, the breakout of this range here, this 3 or 5 months range. We have a breakout first of this 3-month range, and then we have a no-go level down here, from which the market came back, right? Check this one, didn't have acceptance back inside this range, right? Yeah, you got this 5-month range here, and once this one is taken, any advance to the upside we have seen the market coming back inside this 5 and then inside this 3-month range, right? It didn't happen, and we have a liquidation or downside movement of 21.1% from these highs to these lows here. Now, trading is refractory. Whatever you see in one time frame can be seen in all time frames, right? But it's very rare to have this kind of observations in bigger time frames, right? Especially monthly, because the participants of that time frame have different behavior than the participants in the smaller time frames. But what I'm trying to say here is, in the same way how longs, right, or participants who are holding long inventory that got the market in here or up here or added here or whatever, when they see their portfolios way underwater down here, for example, way underwater, right, or not necessarily underwater, but with big losses here, right? When they see the market coming back, they may see this as an opportunity to sell. Okay, so like when you are cut short, for example, and the market just squeezes you, right? And suddenly you have this miracle, and the market just retraces very close to your entry point, for example. And you say, thanks God, I'm going to get out of this short, right? And I'm never going to come back in, never going to show the market again. It happens the other way around as well. And the thing is, that can be something that may happen here in this market under the current circumstances. and I want to elaborate a little bit on that before the market opens, because the stream is not going to last. It's not going to go into the opening, and I say that this movement is 21.1%, and what I did here is I added that to the upside. This breaks 21%. This rally, the rally we are having from the lows is 21. We have 21.1%. Call it 20%, 21%. That's irrelevant, right? Well, just this is being too much exact. But it is up here, right? That takes the market back inside this 5-month range. An upside continuation, we see the market coming back inside the 3-month range. And further upside will take the market to new all-time highs. And I'm talking about the ES here, right? This one here. This is just technical analysis. Look at this one time frame lower that has ended. We have a very, very impressive buy and tail in April. The selling was just a spectacular selling that we have here, right? And this excess that we have here is also really, really spectacular tail, buying tail here. And we have no excess on the upper side. I'm not saying the market is going to go high. I'm just describing what I'm watching here. Okay. Now, my charts are a little bit clearer now. There are a bunch of references that are not here anymore. This is the center of April. 10% rally up here, 21%, 10% rally from these lows here, right? The lower side has been bought on a very, very mechanical, I say this is refractory. Yeah. Support or resistance, now is support. Now let's go to the weekly here. The weekly, we have one time frame higher, and something pops up, something catches my attention here, and this is the gap. Gaps in the weekly time frame is, for what I have been seeing, have the tendency to be closed rather quick, sometimes during the same week, right? They don't last that much. We have something here, for example, gap to the upside. Has taken a while to fill, right? It was filled during this break. After that, one here. But can you see, there is not much, right? There's not much. Most of the time, these gaps that are reflected in the weekly time frame usually are closed sooner than another kind of gaps. And given the circumstances in which the market is right now, I am watching this with special attention here. Now, because what we have here, this gap was formed with news. We have this trading news coming from the meeting between US and China over the weekend in I believe it was in France. And I got this. I think this is the 3-month range that we have in the upper side. I believe, I don't. Well, I think it's this one, right? But the weekly has this no-go level that comes from the monthly. Back inside this range, this is a 16-week range we have up here, right? And another range that up here, 1, 2, 3, 4, 5. It still hasn't gotten inside, right? Every single range or reference has been being taken, right? Just you got a reference in there. There's some resistance, and market just got through that. Right? It happened with this one. What happened? This one. It happened. This one. It still doesn't happen there. This is my main This is my main reference in the upper side, which is 59.48. I would call it 59.50 in the upper side. And this market has been, if you remember when we were talking last week, this market is paying special attention to these round numbers now. You have seen that every time the market has some of these round numbers, 5,800, 5,900, 57 or whatever, the market was, when the market has that reference on site, it will just shoot towards those ones. That's a change the market has. It didn't happen the past month or the past couple months. It is happening now. Markets, trading, markets are always changing. Right? This time is no different. We have the 5,900 and the market has been extremely focused around the 5,900. And now we have around this 100, my bad, 50 and 100 here are in the weekly time frame, right? For short time trading, I don't check this too much, right? But I still have it here, right? Because I have seen that this market is doing something. Stopping here is not good for any kind of selling here, right? Odds are the market is going to take these highs out, or where odds were high, the market was going to take these highs out. Now these ones are out. It's going to keep going higher. Have no idea, right? But this is the weekly time frame. Now, the moving average that I pay attention, why? Because I know that traders look at those ones a lot at the daily, right? Now in the daily, this is the go no go that comes from the monthly, the weekly. You can see here, and there is something really special or particular or interesting, call it. I don't know how to call it, whatever you want, however you want to call it, right? And it's this. Notice what happens here. You have check this one. This is very noticeable. Alright, very noticeable. Very noticeable references here. What happened here? Right? What happened here? What happened here when this market has some advance? What happened here before moving higher? What happened here? No, nothing here. Right? We have we have this 50 moving average down here. Very questionable. That's why I have this right here. And this is the most relevant here. This one here, which is this one here, right? The go no go level that comes from the monthly is reflected in the weekly and the daily as well. And the market just ranges here, right? We have this 7-day range here on the past week, and up to this point, I still think that the structure of the market is very questionable. It is pretty much short-term trading. What is going on? What I have been observing here. But that doesn't mean the market has to break. Okay, but that doesn't mean the market has to break. It rather gives an indication what is going on underneath. And the thing here is, this one probably we may have something to the downside as well, and just to check, right? It did it here, it did it here. I am aware of that. My long-term view of the market, and this is why I guess yesterday, I don't remember when, is when I talk about what Jim call it or name it, market generated information as the laggard indication and momentum as the leading one. Right? That's really simple, but it has a genius in, but just putting the expression putting the thoughts in words, right? It's something really simple to understand. Momentum is to the upside, right? We have this channel here, the market has not been able to go past the half of this thing, right? I think this can be, I don't know if this, I don't use what is this elastic bands? I don't recall that. Probably that's reflected in that kind of that indicator, but the market has been constantly being bought from this reference to the side. When it gets too far, closer to the center, the market, as you can see, start trading sideways, get closer to this, and then just has a breakout, right? Closer, breakout. I think this is not different, right? And my long-term view of the market, while it has a bias, right? The key is to have this, call it conflicted thoughts that can live together in your brain. One is my long-term view, and the other thing is what's happening right now, what the market is doing right now. I am not going to do any kind of short-term trading, base it, okay, and base those trades on my long-term view of the market. Those are completely different things, and the better I get to differentiate those thoughts, separate those thoughts, separate the decisions that I make based on those thoughts, I believe the better odds I am going to have. Okay. All right. Let's go back to this. This is one thing, right? This is one thing. These kind of actions that are coming here. Maybe there can be something here towards this range, lower the range again. But notice how every time the market has broken below this support line, it was immediately bought. There was some significant selling. Get closer, zoom. Significant selling. Breakout again, and significant selling. Right? Every single time the market has broke this support, was bought, has been seen as an opportunity to buy the market. As it does, it adds, it's bought exactly from this 50, that give us 3 white low, very questionable edge here. This low is very questionable. If the market comes back to this range, is the odds that the market goes or tries to reach the opposite side are high. If it doesn't, the upside can be also impressive. Look at what we have here, what we have here, what we have here, but these ones are too far back in time. Right? Now we have this 20, and add to that after this breakout where the market has been bought, exactly at this reference, and this is the adjusted. Daily, right? The non-adjusted gives me even something better, right? Notice that notice where the 200 is here. 100 is following this. It's right at this support line. Now, the non-adjusted, and why I'm checking that as well is because I've seen how the market is reacting with these references here. Look at what happened yesterday. Right? This is a 200 moving average. We have buying coming from exactly the 50, exactly this 100, exactly the 200. It is just very, very questionable, right? And all of that take us to the daily or to the intraday, right? In which I have my market profile charts. Okay, let me open. I don't know what happened here. Sure. Okay, let me bring this charts. Let me just duplicate this chart so I can keep my. All right, this right here. I want to bring it right here to you. Oh, before I go over there, how much time do I have? I still have like 10 more minutes here. Wait. Well, let's finish this pair. Let's finish this. Notice, I hope you have noticed yesterday, there was just a lot of selling yesterday, but the selling couldn't take the market too far from previous day value area, right? There was one trade here, and this trade was to the upside after seeing the value wasn't moving too much. Value was overlapping lower, slightly overlapping lower here, right? Slightly overlapping lower. POC was moving lower, not that much relative to the kind of like to the first periods. It moved from up here to down here at the close, right at the center. But this was the trade yesterday. Only one trade, right? We have this distribution from the previous day, short covering here, non-excess here, being an indication that maybe, okay, this is the next thing, this is the very important thing, maybe inventory has gotten too long. You remember the monthly, weekly and daily charts, what we talk about on those time frames. Maybe inventory has just gotten too long for the market to go any higher, and the market needs some liquidation here, all right? Some sort of rebalancing, some sort of removing or shaking off the weak longs before it can go any further. That can be the situation that we are witnessing here, right? I hope you remember what we talked about the other days in this intraday view of the market, but there was a lot of selling happening here. Every single time the market tried to rally and take this high, it just didn't. There was something particularly special here. I don't remember. I don't know. I guess it was about around this area here. Or I don't remember. But there was significant block activity that I was using as a pivot, right? Above that, I was monitoring probably breaking this high, the selling that I have seen yesterday probably was related to the late liquidation that we had the previous day, right? And the trade comes when the market closed this distribution here. It closed this distribution here. Right? We have this little one, very narrow area, very beautiful, not beautiful, very narrow area for any kind of trade here, either short, your views to the downside or to the upside. I was to the upside because market is going higher. All time frames are in sync to the upside. The selling the market wasn't having it that much, and every time the market rally, it was just met with liquidation, right? But that liquidation didn't have further advance, didn't have volume, new selling joining, which was an indication that probably that was just liquidation. Okay, that's why I'm calling it liquidation of the intraday activity. And here this is a very narrow area for me or for everybody to see, the if the market has or gives us confirmation of the trade. If let's say I am at the low, I am long, as soon as the market takes this one, maybe for one tick or two ticks, and that's it. The market may take this for one or two and then keep going higher, right? But the fact that it has taken it, it can go all the way up to here, but I may be out. I'm not going to be part of that. The same thing goes to the upper side, right? Look at what happened. Comes kind of like right to the center, and you have a couple points here to play. Right? After all of this back and forth, 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 you have no excess here. These kind of highs have a tendency to limit the damage the market can do in the opposite direction. And then at the end, we have non-excess low here, non-excess low here, non-excess up, non-excess high here, non-excess high here, right? And the potential of a sequential trade inside. What is a sequential trade? The sequential trade is the market takes one side out just to take the other ones afterwards, this one and this one. Whatever it does first, the trade is the opposite one. But still, remember what my point of view is of the market. The inventory might be have gotten too long, and some rebalancing may be necessary for the market to keep going high. I'm not trying to catch any lows or sell any highs here. Now, we had previously a spike, I believe was here in the overnight of this day. Now this is not a spike. What we have here is not a spike. This is just inside this range, inside the overnight range. It's catching my attention that we have a small gap here. This can be key today, right? It is just a nuance, this little one here. The market doesn't pay attention to this one. All right. Notice how inventory is 100% short settled. We have settled here. All the trade has been made in the overnight. So there's 65% odds that the market has some counteraction here. I want to see what happens. The market ignores that. We have an inside day yesterday. If the market opens below this, right? I want to see if the market has continuation. We see the market taking this low out. Remember what happened here. This is short covering. And this one adds to this, right? The market opened with a gap the previous day, closed the gap, come back inside, targeting the opposite side. It didn't have acceptance, and short covering just happens. Now, another thing, look at the profiles here. This is the daily. Right, there's a lot of volume in this area, and yesterday just added volume to that. And this looks like, like a P shape, possible short covering going on here. And what short covering does is short covering weakens the market. That can be happening here, right? That I have that in mind. Now, one last thing, all right? And this is so far, and this now is for the current day, for the current session. Now, look at where this high is. Right? This doesn't speak good for the short side. This is a negative for for any negative view of the market, this is no good because this rally is right to this low, pretty much to the 5,900 right there. The round number. It didn't get back inside. If the market gets back inside here, probably may target this one and this one. And what happens if these areas are not taken? Right? We have very prominent POC here. Join this together, you will have a really wide peak here. Looking to the downside, this is very questionable, was exactly at 0, like a couple ticks from 0. This low is exactly at was exactly half back. This is the weekly gap, right? Exactly the 100 moving average, and this is the close of the gap. We don't. This is the breakout of this inside bar, inside day, because 2-day range becomes 7-day range, in which we are now. And this may have gotten too long. Any downside, I believe, has the potential to find resistance or support around this major moving average here. I have marked my 21% rally from the lows, which in this case coincides with the 200 moving average, and that's why I have the 200, the adjusted 200 moving average right there. Right? If okay, now this is a big if here, right? It's not unusual to see the market having some back and forth from this 200, which is a widely move seen average, and after, if there is acceptance, bigger time frame participants may re-enter the market up here. If it's not, okay, the retracement can be quick, right? Can be really quick. That's why I want to watch. But the markets don't move in straight lines. That's another thing, right? I always have to see where the market can see may have some kind of potential for rebalancing or stops or pit stops or whatever. So far, my first thing, I want to see where the market opens relative to this range. With a gap to the downside, maybe even one tick, or opening inside or opening right at the low. Okay, it is a couple minutes, maybe less than a minute before the opening. I'm going to call it. I'm going to call it a day here. If I see anything, I will post it in Discord, and I don't have anything else rather than tell. I wish you a good trading day. Before I go, this is something else I am checking here. This is something that can drag the market, and I'm paying attention to this. All right. Gold, crude selling from crude going lower is not good, right? And this is really bad. Bond market is breaking below support. Any downside can put pressure on the selling side on the market. So breakout is coming back and checking this area, this support here. We may come up here, but this is not good. While I'm watching these markets, gold may have found support here. All right. Have a wonderful rest of the day. Stay safe. Hope I can see you tomorrow. Bye bye.